Back right now for a closer look inside this year's blockbuster IPO market. Let's welcome NYSE President Stacey Cunningham. Stacey, it's great to see you. These are big numbers, and it is really something that's uplifting and good to see. But when you hear Leslie lay it out like that, you kind of start to wonder why. Why do you think it is that there is so much demand and that some of these stocks are popping so much on the IPO?
Leslie says, too, when you look back at the spring, nobody expected that we were going to break all sorts of records for an IPO year, given what we were seeing. And I think it's a little bit of a story of you don't know what you have till it's gone. I think there was a lot of concern in the spring that the IPO market might not be there forever for so many of those companies that had grown privately. They didn't know if they were going to lose their opportunity to get out into the public market. So we saw a lot of pent-up interest as soon as that window reopened of companies looking to come out. Also, the retail interest is driving a lot of activity in these names, and they're not part of that allocation the night before in a meaningful way. So those allocations, with a traditional IPO, are going to a handful of institutional investors. You're not seeing the true market demand until it's traded publicly on an exchange, when you can include that retail demand and everybody else that wants to take part. We're trying to solve that problem with a direct listing, and so we filed with the SEC to introduce a capital raise, which would level that playing field and democratize the process so retail can be part of it day one, too. I think that would certainly dampen the pops we're seing. So a company would sell their shares instead of selling shares in an IPO the night before their first day of trading on an exchange, which it's under an underwritten offering by the banks, and they allocate them out to their clients. And then the next day, just if you look in the example of DoorDash, when they're doubling the next day, it means that those investors that took part the night before got a pretty good payout for not a whole lot of time risk in the market.
Right.
What we've proposed is that the company would sell shares on the exchange in the morning as part of their opening process to raise capital, and all would be able to participate in that opening trade. So retail investors could buy on that trade as well. What you would see is real price discovery with buyers and sellers coming together. At the same time, it would be one trade that includes the company's offering and the opening trade on the exchange.
That would be great. I mean, we all want to see retail investors be involved. We want more Americans to have a chance at really seeing ups like this. And you see the comparisons back to the year 2000. It's a little concerning. Stacey, I want to ask you a question from Steve Leisman. As you know, he has the All America survey, and in it, he finds that the Main Street Wall Street divide has really grown. Americans, like never before, believe that high stock market prices aren't necessarily a sign of a good economy. 57% of Americans say that they thought the Dow's new all-time highs are more of an indication that the wealthy and corporations are doing better than it is that the economy is doing better. And we often make the point that the market averages aren't the economy, that they're two very different things. But what would you say to Americans who are feeling maybe left behind?
I would talk not just to Americans, but to those who are part of the success of this year. What we've learned in 2020 was the pandemic and its impact was not felt equally. You were talking about small businesses shortly ago, and I'm talking about a record-breaking IPO market with stocks doubling in their debut. The companies that have done very well are not reflective of the broader economy in those small businesses. What I saw in the spring, though, was a lot of the largest companies that are listed on the New York Stock Exchange dove in to solve the problems by finding ways to help those businesses that were being impacted. That's what we're going to need to see in 2021, because we can't let that wealth divide continue to increase, and that's what we're going to see. We need to look for ways to get retail investors and the broader economy included in the wealth creation that's happening. We're trying to do it with the direct listing, but we also need to use our resources to help businesses that are really impacted by the pandemic this year.
Yeah, we've been talking a lot today about the vaccine that we're anticipating could be approved any time by the FDA for emergency use authorization. Obviously, it's going to go to those who need it most, the first. It's going to go to elderly Americans, particularly those who are in nursing homes. It's going to go to healthcare workers. But then it gets down to essential workers at some point, too. And where do you think financial workers, NYSE workers, kind of fall on that list?
Yeah, we'll wait for our turn. I mean, we've put a lot in place here to keep the community, to de-risk the facility. We partner with Dr. Scott Gottlieb, as you know him well. And he's been a great asset and consultant for us as we reopened the trading floor in May, so that we could operate here in a safer environment. And it's been very, very successful. So we're, not looking to jump any queue with respect to vaccines, but we are very encouraged by the progress that the drug companies have made, the pharmaceutical companies have made this year. I mean, it's really astounding, and we're looking forward to, seeing that impact on the economy more broadly very quickly.
Shepard Smith here. Thanks for watching CNBC on YouTube.